What's up guys, welcome back to the channel. In today's video, I'm going to show you how you can use smart money concept for long-term success. A lot of people use smart money concept strategy, they understand the strategy perfectly, but they fail to have consistency. They are not consistent using this particular strategy. So what I'm basically going to do in today's video is that I'm going to show you how you can use this smart money strategy for long-term success. Okay, so that's what I'm basically gonna do. So before the end of this video, what you're gonna learn will help you protect your trading capital, because one of the ways to survive in the financial market is by being able to manage your risks properly and protecting your trading capital. If you lose money in the financial market, if you don't protect your capital, I don't see you having long-term success using smart money strategy. So another thing you're going to learn before the end of this video is that this will help you improve your win rates. Okay, your win rates will be improved and it will equally help you maximize your profit. So all these things put together will help you increase your chances of becoming a consistent, profitable trader in the financial market. So let's jump straight into it. If you're new to the channel, I would like you to subscribe to the channel, be part of this family. Over here I teach about smart money concepts and how you can actually make money trading with smart money strategy. Okay, so looking from this area right here, this is a simple sketch and I will use it to explain a lot of things that will make sense to you and will help you understand how to trade with smart money concept better. So just like you all know, understanding smart money concept, one thing you should be able to do is being able to read the market structure, because market structure is one of the basic concepts of smart money concept. But if you fail to read your market structure the right way, I'm telling you the truth, you're gonna fail as a smart money trader. Looking from this chart right here, and what we actually see is that price sweeps this particular high and now we're getting a pullback to the downside. And the way I map out my valid order block each time I want to trade, the way you see me map out a valid order block, you see this range right here, because over here we see price accumulating a little. I hope you see what price did there. So this was an accumulation over here. So after price accumulates a little, it pushed to the upside, sweeps the high, takes this external range liquidity, and now we're seeing a push to the downside. So I'm going to mark this out as a liquidity sweep. Now price pushed to the downside and price breaks internal structure. You see price break this internal structure, and over here another break of internal structure. So it's okay to label here your break of structure. Okay, now the way I trade, I'm going to map out here as my point of interest. But if you look at this area right here, what else can we actually see? We see price pulls back a little, but it couldn't get to this particular point of interest. We see price moving to the downside and we have another break of structure over here, and we have price sweeping an internal range liquidity. And if you look right here, you see price mitigates this point of interest right here. So from seeing this, you already know that the order flow is bearish and it's okay to look for a short opportunity from a zone around here. So for me, I equally map out another point of interest right here, looking to trade from this particular one right here. And a lot of people might be confused, but if you look closely, you understand that this is a valid point of interest. At this point, I had 2 points of interest. When we go to a live chat, I will show you the example and I hope you understand better from there. So from here, we have 2 points of interest. Why is this a valid point of interest? What you can see is that this area right here mitigated another block. It swept liquidity and now price pushed to the downside, breaking structure to the downside over here. And if you look, we have an inducement area right here, so making this a high probability trading opportunity. So when I had these 2 points of interest, what you should do as a trader is you need to use lower time frame confirmation. Not only using lower time frame confirmation, you have to use a very favorable risk to reward ratio. Okay, you need a favorable risk to reward ratio. I see a lot of traders trading with 1:1 risk to reward ratio, and that's not a very good one. Personally, I use 1:4. When you drop to your lower time frame and you get a confirmation, you will hit your target quickly. So let's say in this case, you expecting that price will take this particular low right here. That's your expectation, right? Expectation is that price will take this low right here when price mitigates this zone. But when you use your lower time frame confirmation and you get your lower time frame confirmation, and the way I trade using 1:4 risk to reward ratio, I can actually hit my 1:4 at this particular area without expecting price to reach this zone right here. I hope you're getting what I'm saying. Lower time frame confirmation is very important, but you don't always get it. But when you get it, it's to your own advantage. So me that trade with 1:4 risk to reward ratio, I might get the 1:4 at this area without actually waiting for price to hit this particular target. So if I enter a trade right here and price pushed to the downside, hits my target, there's a possibility that price might not actually take this low and it will reverse from here. So in this case, I already made my profit and I'm out of the market. While people that are waiting to get price to hit their target will still be in the market, and they will spend more time in the market compared to me that is using a favorable risk to reward ratio and a lower time frame confirmation. So what you should note is that when you set a profit target at least 3 times to 4 times the amount of your initial risk, you are very sure that you are earning more on winning trades than you are losing on losing trades. Okay, so using a favorable risk to reward ratio allows for smaller winning trades to make up for your larger losing trades, resulting in overall profitability. Okay, so let's say you're losing more trades, you take 10 different trades and you lose 6 of those trades, but you made profits in 4 of the trades. You will see yourself being profitable because you're using a favorable risk to reward ratio. And trading with a good risk to reward ratio will help you have a plan in place that gives you a higher chances of success. You can approach the market with confidence and discipline. This psychological edge helps you stick to the trading plan and strategy to avoid impulsive decision and manage emotion effectively. So when you have a specific risk to reward ratio you use in a trade, it will help you approach the market with confidence, because you know even if you lose that particular trade and you win the next one will be able to cover for the one you lost. Now, from what I've been explaining, what you need to do is you're gonna drop to lower time frame to look for your lower time frame confirmation. And what does that look like? So when you drop to your lower time frame, what you're going to look for is a market structure shift. Okay, so let's say price has been moving in an uptrend on the lower time frame. This is what price is doing on the lower time frame. What you need to note is that this is a break of structure to the upside, and this is why I said you should have the general understanding of how to read market structure. So what you're going to do is you're going to wait for this shift in market structure where we see price changing in the character, because what you can see from this area, the character of price is that price has been moving to the upside. We're expecting this lows over here. You see price respected this low, it didn't come back to this low. Price respected the low. These are protected lows. Price didn't come back to take this protected lows. So at this point, you see price coming to take this particular low. So when price took this particular low, what you're going to do is you're going to look for your lower time frame zone. Okay, you look for a zone on the lower time frame which you're going to look to enter from. So entering with a lower time frame zone, you will see that the size of the zone will be smaller. Okay, the size of the zone will be smaller, but if you're trying to trade it from a higher time frame zone, you will see yourself having a bigger zone which you'll be trading from. And using a bigger zone will extend the time you need to wait to hit your target, but using a smaller zone will help you achieve your targets very quickly and easily. So in this case, when you get a lower time frame, you look to trade to the downside. One thing you should keep in mind is that once you hit your profit target, that is based on your risk to reward ratio 1:2, 1:3, 1:4, you have to lock in your profits, close few positions, and if you feel you need to hold some of your position, it's still okay and you can look to continue trading. At this area, when price comes, drop to the lower time frame to get this kind of lower time frame confirmation. When you get this kind of lower time frame confirmation, you look to ride the trend. Okay, once you get your profit target, exit the market. You can also manage your trades till you hit this particular target right here. So what you should keep in mind is that this zone right here is still a valid zone. Okay, it's still a valid zone. The only thing you should wait is for price to come back to this zone. We don't know how long it's going to take price to come back, but once price comes back to this zone, still drop down to your lower time frame to get the lower time frame confirmations that make you ride the trend to the downside. And what you should keep in mind is that when you get your lower time frame confirmation, you have to take your profit based on your risk to reward ratio. Okay, take your profits and exit the market, or when you close few positions, you manage your trade, because most times what we usually see is that when price comes back to this zone after it must have moved for a very long time, we will have some other blocks at this kind of areas. Okay, you might have some other block at this kind of area, and when you see price, this kind of other block might push price to the upside. So when you get your lower time frame entry, before price could get to this other block, you already hit your target. And if this other block fails to hit price to that particular point, it might give a little reaction and it might come back to this particular one over here, and this one might be the one that might push price to the upside. Okay, so this is it, and this is how you can trade with this strategy. This is a very good strategy and I enjoy trading with smart money concepts. So let me show you live examples now so you get a better and a clearer understanding. So this is the chart I'll be using for the example so you understand better. This is Euro CHF, the 2 hours time frame. And remember, we use the 2 hours time frame to mark our structure, and we use the 15 minutes time frame for our entry confirmation, right? So if you look, price has been in a downtrend. Now price forms this low, we're getting a deeper retracement you see this is a very deep pullback, and we're going to look for a zone we're going to trade from, which will push price lower to continue to the downside. Okay, and this particular setup was shared in my Telegram community, and I will show you that after now. But let's read the price action right here so you will understand how you can maximize your profits, improve your win rates, and also protect your capital by just applying the simple tricks I'll be showing you on this chart. So from this area, let's start from this area. What you can see is that price takes this high after the accumulation, and this is a very simple thing to understand. People who are looking to trade from this particular area, breakout traders, they were trapped at this area and taking them out of the trade. So this is a very good manipulation area, and after that we see price push to the downside, and this is a valid break of structure to the downside. So at first what I did was I was seeing this area as a very good place to trade from. This particular high right here, this was my point of interest. If price comes back to this area, I will look to take this trade. So that's a very good place. But another thing I discovered and understood is that we still have another point of interest right here. So here is another point of interest, and is a very good one. You see price comes back, mitigate it after it took this inducement area right here. Price mitigates the point of interest, and we see a continuation to the downside. So when you see something like this, it should help you understand that this particular zone right here is still a valid place to trade from, because at first you see price takes this internal high, that is an inducement area, more like another manipulation, mitigates the zone, and you see how it's pushed to the downside. You see these bearish candles with momentum. This is an institutional candle, price pushed to the downside, leaving this inefficiency, and we equally have another break of structure right here. It's okay to map out another point of interest right here. So this is another good zone which you could look to trade from. Why the order flow is bearish, price mitigates another block push to the downside, and you see it met the criteria for a high probability setup. And if you can see, price builds a little liquidity at this area. You see it's more like a trend line liquidity. Okay, so when I shared this setup to my Telegram community, I had these 2 points of interest, this one being the first point of interest and this one being the second, and I told them to wait for lower time frame confirmation. So in order to be consistently profitable in the financial markets, one of the things you need to apply is good risk management. How you can apply good risk management is, one, having a very good risk to reward ratio. And for this example, we'll go for 1:4 risk to reward ratio, because that is what I always go for. Okay, so we go for 1:4. And another important thing you should do to be consistent profitable in the financial market is that you need to have a very good trading plan. Now, playing price forward, what you can see is that price taps into this particular point of interest. You see a little tap into that zone, and you see price pushing to the downside. Now it's okay to drop down to the lower time frame to see what's actually happened, but before that I will take price back. So I just took it back now. So we go to the lower time frame and see what we have on the 15 minutes time frame. So this is the 15 minutes time frame, and you see this is our point of interest. So if you look at the price action right here, you see price has been trending up on the lower time frame. Okay, price is in an uptrend, and what you should be able to do if you want to get lower time frame confirmations is you should be able to read the market structure, understand what is happening here on the lower time frame, and you see that this is the most recent high. So price has to take this high, tap into this point of interest, then we look to see if we're going to get a change of character and trade to the downside. And now what can you actually see? Price takes this particular high, tap into a point of interest, and you see that massive push to the downside. Now what you should note is that if price comes to take this particular low, this low over here, because from what you can see, price hits the low and we got a pullback. This low right here formed this particular high, so price has to take this low before we get a confirmed change of character. Let's play price forward and see if we can actually get it. And what you can see, price gives us this market structure shift. You see how price broke structure to the downside. Now you're going to map out your lower time frame zone, which you could look to trade from. This is the zone right here. Now what you should keep in mind is that from this particular zone till this low right here, this lower time frame low, if you get your entry right here, this will give you 1:4 risk to reward trade. Very easy and fast. If price comes back, mitigate this particular zone, you see price hitting your target very quick, and it will be very easy for you. Okay, very easy. But if you entered at this higher time frame point of interest, so let's say at this particular area, you entered at this particular point of interest, where will you be looking to get your 1:4? Because this is your higher time frame point of interest, and you know you are trading with a larger zone from the higher time frame. So the possible place you can get your 1:4 risk to reward trade could be at this low right here. See that the low could be the area you could get your 1:4 risk to reward trade. It doesn't mean that trading like this or entering your trade without entry confirmations isn't right. Sometimes I do take a trade without actually waiting for this lower time frame confirmation. Okay, it just depends on how I see the market and what I see in the market. But what I'm actually telling you is that with lower time frame confirmations, you have the chances of hitting your targets very quickly and very fast. Okay, and using a favorable risk to reward ratio, like I said to you guys, when you lose more trades, once you win, let's say you're using 1:4, you might lose 2 trades before you win one of the trade. Once you win one trade, you're already covered for your losses. So that's one thing you should keep in mind. Let's play price forward, and you see now price returns mitigates our zone, and you see price shooting to the downside. Okay, you see price shoots to the downside and it hits our targets, and this is a very quick 1:4. In a scenario where price didn't actually want to get down to this particular area, okay, let's just imagine a scenario where price didn't want to get down to this particular area and price just hits this low and continues to the upside. So if you waited for your lower time frame confirmation, you must have hit your target before we see price reversing to take out this particular high, because I usually see that some of the times I might mark out my zone, my point of interest where I look to trade from. Price hits that zone, retrace back and give me a little retracement before we see that zone failing to hold price. You see price blasting through that zone. In order to avoid most of these things and avoid more losses, when you wait for this lower time frame confirmation where we see market structure shifts and we have our lower time frame entry, you see it's going to save you a lot of stress. Okay, and I've actually explained and made a video on how to take advantage of the higher time frame zones where we see price give a little reaction before the zone fails to hold price. I actually taught you guys how to do that, and I might link the video in description. I think I titled that best order block strategy, something like that. So let's play price forward and see. Now you see price hit our target, a pullback. You see that pullback and a continuation to the downside. But if you wanted to take more trade, let's say in a situation you want to take more position, you've got your first entry, price hit your target, you took few positions at this area, you left some running, and you want to enter another good trade. You see this particular area right here, this area could be another possible place you can look to enter your trade for your second confirmation. So there are people who usually wait for first confirmation and second confirmation where they don't enter at this particular mitigation and continuation. They don't enter trade there, they wait for the second one. That's people who have a lot of patience. I used to do that, but I stopped because you need a lot of patience to wait for a second confirmation, and in some cases I don't usually even get that second confirmation. So if you're waiting for a second confirmation to enter a trade, this area is a very good place, and let's see if price actually gave us this second confirmation. Boom, and you see it, price gave us the second confirmation. You see immediately price gave us the second confirmation, entry taps into the zone. You see how price pushed to the downside very fast, and now if you actually used the higher time frame zone, you made your profits. Congrats to you, you made your profits, and you see price continuing to the downside. We're actually getting a pullback right now. So this is how you can actually trade with these concepts, increasing your win rates and staying profitable in the market. So my advice for you is that if your risk to reward ratio is 1:1 or 1:2, after watching this video, change it in your trading plan. Okay, go back to your trading plan, make some adjustments, look for a favorable risk to reward ratio. There are people who trade 1:6, 1:8. Just imagine you took this trade from this lower time frame zone and you hit this target. This is about 1:13 risk to reward trade. It might be more than that, but I'm just saying, okay, it could be more than that, but this will give you a favorable risk to reward trade. So this is how to trade with smart money concept. If you want to learn more about smart money concept, I have a lot of video here. This is my Telegram community, and this is where I shared that particular setup. I hope you can see that I shared the setup, and I explain I have 2 zones here. Best approach is the lower time frame confirmation, and from what you can actually see over here, this was the recap when price reacts from the first zone, and this was where we got our entry confirmation. Okay, so this is where we got the entry confirmation, and we already hit our 1:4. Okay, so if you have interest in joining this Telegram community, the link is in description. Join the Telegram community today. So that's it, and I hope you got value from what I just explained. If you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. Thank you, and see you in the next one.